Alrighty, Doc here from North America. Good morning, good afternoon, and good evening, and good Monday. TGIM, thank goodness it's Monday. So here we go. We got another week of interesting things. It'll be a full week, and in the following week we have the Monday off. So it'll be a little interesting towards the end of the week. Numbers are just kind of bouncing around here at the moment, as you can see on the. We'll just put the other one too. As you can see on the J4X there, you can see that the Swiss has been showing a little bit more strength than we were expecting a few days ago, and then out of nowhere, it perked up and started to turn. I guess after that interest rate thing, in the United States, when the interest rates all of a sudden jumped. I mean, you talk about it. See, that's what happens. Over the Obama years, they talked about it over and over. We're going to raise. We're going to raise. We're going to raise. 8 years goes by, and we get one raise. That's it. Every quarter, every month, there's talk that there's going to be a raise, but in the end, there was no raise. All right, let's open this up. So markets have a hard time interpreting the fantasy. Raise, 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 but no raise. So that's where we stand. It becomes kind of crazy from it all. All right, little end of the cold there. Let's see now, where am I at? So there it is on the Chicago quant. You can see the same thing, moving back up towards the top end of the range. Strong now. What's that? 1, 2, 3, 4, 5. So we're looking at a 6-day in a daily buy. It didn't make it into the weekly buy last week, but it is plus this week. We'll see. See how long that holds up. Right there. Go. Bingo. All right. Now let's check out the J4X, the way it looks. Same situation on the daily. See that there? Just like, look. Do this. Oh, we gotta fix that too. Let's fix this. There it is. All right, and when we come over to here, we have that there. Get the fact check spreadsheet up like so, and as you can see, that's noise is kicking out there in Swiss there. You can see the 5 days right there in 1 week. Oh, it did go into the weekly buy. Okay, it did make it into the weekly buy last week. So we got to put a line through that. Let's fix that. There. So we don't need the little circly thing. Okay. Just remove that. So, and that's what it really comes down to. And let me just give you a quick view of the 30-year bond and the way it's acting. We're all thinking here in the States it's going to go at least to the 3s. That's what we figure. Maybe they're going to do quarter points. Maybe they'll do half points. I imagine if they would do a half point, that could. I would like to see them do half points. The Obama years, they promised quarter, and they did nothing. And so, almost 2 full terms, and we don't get anything. Oh, and then what happens is Mr. Trump gets elected, and right after the election, literally in a matter of 2 or 3 days, he's not in office yet. But that's the way markets. What they do is they anticipate that way, and next thing you know is they raise the interest rate. Boom. My first second sip of my cup of tea. My first cup of tea of the day. So let's go over and look at that 30-year bond. This is the 10. Yes, there's that right there. And you can see it's been driving down. When this thing goes down like so, oh, you can't see. When this thing goes down like so. Interest rates rise. That's what that means. It works inversely. So you can see we've been in the weekly sell for a few weeks. That last week was the real signal right there. That was like, okay, we've given up. Our math started picking it up back in here. We realized that there were some issues, and the weekly picked it up. And the dailies have been picking up, and it's been cruising along in a long daily sell for 3 weeks now at the same time. So that is the, oh, let's see. It's it doing? Is that there? Is that, yeah, that's it. Just making sure it's filling in there. There's the 10th. Exactly. So that is really what it is. 1, 2, 3, 4th. And I guess there's not much more that can be said, but the one thing we can make very clear is we're seeing some fundamentals actually do something with the product, which is a real nice thing. Because we live and die by technical analysis anymore. Because fundamentals, you throw those out the door. And so it would be nice to see the fundamentals come back a little bit, where some reality starts to creep into the marketplace, so that like analysts like Janos and so forth can do their work again like they used to. There was a time when analysts could take a look at the earnings, and they could take a look at the inflation and the interest rates and the producer prices and the consumer prices, and look at all those fundamentals and say, wow, we can see that earnings could be lower or they could be higher, or in the currency situation, this could add more GDP to a country, or this could add less with less inflation, one or the other, and that was how markets kind of functioned. Now it's just central bank fiat by the bosses. Indeed, indeed. Now over on J4X, let's just see what the weekly looks like. Oh, cool. Blew it all the way up. I like that. There we go. And there's the weekly. As we wait for it to do its thing there. That thing it does. There we go. You see the weekly's trying to turn up just like our work. It's turning. Oh no, it's not. Right there. Just like our work is. Doing the same thing, turning up. Roll over, roll over, roll up. Roll up, roll up, roll up. Alright. Alright, from there we jump over to, let's see, who do we see from here? Let's take a look at the euro. Put the daily back in there. Daily's going faster. But we like looking at the way J4X interprets the weekly, because our math does a nice job. The math that we've developed, simple math, anybody can get their hands on it. You go into J4X, you can put it up there in a heartbeat. Just a slow stochastic, which is the dashed yellow line, or gold, whatever you want to call that, against the fast stochastic white line. That's what it is. Two different stochastics battling with each other. And then, where we had a trader on Friday talking about Renko bars, we're using Hinkiashi, which is pretty close to the Renko. One is, Hinkiashi is like an averaging of the opening and the high and the low and the close, and then dividing by X and so forth, which is very fascinating. It's kind of like that atomic, it's like quantum mechanics, And got to have that half spin, one spin, and one and a half, minus spin, minus plus spin, and spin, plus and minus, quibbits and pivots and works and so forth. And then Renko is you set like X amount of bars, it'll generate a red. X amount of bars plus, it'll generate a green. And so it's a spatial mathematics Renko. And just like the way Hinky is to a certain extent. Hinky's a little less, but they're both spatial mathematics. So, it's good stuff. Good stuff, definitely good stuff. And the trader was in here on, was it Marcel? Maybe it was. It was doing research. He'd been following the Hink. We may have gotten into a conversation, or he got into it himself a long time ago, and has been doing dedicated research on it. One or the other. I know I've seen the name in here. Don't remember all the topics, but most of the time I've got a good memory, so I usually remember most of the things with conversations. But it's nice to see that he does research on something that we are not talking about, and so that makes it more exciting, because we love new research. So we're happy with that. All right, and there's the euro. You can see it's trying to dance its way steadily up. Let's take a look at it over on Chicago Quant. And there it is right there. Now okay, so we're down on the day, and the bar's aiming down, and what'll happen is this, after an hour or so, this is kind of more delayed. Not delayed, it's live, but the math is just nowhere near as fast as mine. So that's what it really comes down to, is my math is just ahead of everybody. If you can find a math that's better, please, I would love it. Because if I could find a math that's better than mine, then I could use that and my math. Boy, I could get myself off the 85 percentile and move up into the 90 or 95. So traders out there, be my guest. See if you can find something better than my work. From there, as I said, you can see it's trying to move down. You can see the weekly is trying to roll over a little bit. It's below the time manifold, but all three lines, the two gas line 3s are minus underneath the manifold, but not minus below the 0 line. So there's just mild pressure on it at the moment. And then let's see if we can show you over here on the weekly. See how the weekly looks there. No, it's not that. Right there. Weekly. There it is. So there you got. There you have there's the weekly. Just said, and you can see the daily is doing the same flirtation. Now what we'll do is we'll see how it looks in Chicago, or at J4X in this case. Okay, looking firm. It is rolling over. It's doing that curve here, because this is the one we're really looking at now on a weekly basis. So it's doing that curve right there. So we're starting to get that same game. What we need this to do is this to break that. We'll shoot back to the daily. Here somewhere. You see the daily. This will turn red in another hour or so. If it stays like this, it'll start to do the average, and it'll start to bring down, statistical average, and it'll do all those combinations of the half, the 1 and a half, and, division and subtraction and twisting and turning, pi r or something or another, and so forth. It's like, that's the way it is. Not many people realize that stochastics and these concepts were used during the Manhattan Project to smooth out certain calculations, and they used to run them out of where Jimmy Simon took over. How about that? The largest and most successful hedge fund in the world is using mainframe computers back in the 60s. Those mainframes that he was head of the physics department, who is not a physicist, he is a mathematician. He knew where to go at the right place because he was trying to make money. And he went to Stony Brook, where Oppenheimer and Feynman and everybody else, and Fermi, and like in the Fermi lab out in Chicago, and they were sending their data to Stony Brook in the mornings, but the time difference between New Mexico and New York City was 3 hours. So even with the scientists out there getting up at 7 or doing their work at 5:30 or 6 in the morning out there, and starting to put it together and trying to put it, to send it to the computers to be able to see what the calculations look like, even if it was 8 o'clock, that meant that it was 11 o'clock in New York. So they had all the time in the world. They had 3 hours to play with the stock market, and they did. I know one of the physicists that actually did. And so that's the logic behind all the like the Jimmy Simons thing. He knew when that physics department fell apart. What did he do? He applied to be head of the physics department. They were like, "Really? You've got a great name in mathematics. Why are you wasting your time in physics?" He said, "Oh, no problem at all." Because he knew where the what does Dellinger used to say? Why did he rob banks? Because the banks is where the money was, and he knew where the trading statistical scientists had left their codes on the mainframe. Indeed. And now today, Mr. Simons, we like to call him chain smoking Jimmy, is the most successful hedge fund manager in the world. Isn't it funny how the news won't even talk about him? It's amazing how well you can stay out of the news when you pay to stay out of the news. And it's amazing if you're a leftist or you pay these leftists money, they'll keep you out of the news. It's funny. It really cracks me up. All right, anyway, that's where we go with the stochastic. That's why we basically are using the same tools as the research scientists used at the Stony Brook back in the 1940s, building the Manhattan Project, the nuclear bomb. That's right. So when you look at this, you're looking at the concept of what scientists were playing with, right there, that mathematics. and I use it to smooth my formula out. So that's why it matches up so well. But my math is still way ahead of them. So, you know, you can see mine's already curving, and this is still trying to evolve. It'll get there. It'll curve after another hour or so, and we'll be ahead. Hey, 47, how are you? Happy New Year. We're having a fun Monday morning. Let's see, what can we say about anything? I see it's the second week of January. Last week was fun, wasn't it? I mean, we had some real action. Fundamentals seem to have jumped in the middle of the week out of nowhere and said, hey, we're terrified. Interest rates are going to go up. And they went like, oh, where's that Fed Reserve put that everybody's been getting for almost 13 years? And it was like, oh, maybe they're not going to give us that free put anymore. But that's all right. President Erdogan is going to give a free put over there in Turkey. So, you know, if anybody can figure out when that all starts, I mean, that'll be fun. Free puts from a government is always nice. Free is free, especially when they're puts. All right, let's see, where do we go from here? So, Happy New Year to you, 47. Let's see, what was that? That was the euro, so let's take a look at the GBP. GBP doing a little rolling over too, a little pressure there. See the same thing here on the weekly, but overall still strong and a green dot, so can't complain. And then let's take a peek at right there. There it is on J4X, a little pressure there. Let's see how the hinkies are looking fine. Green away. The white line is holding up. Excellent. Not even curved yet. You know, it's going to take a little while. If this comes back up more and starts to, you know, jump back over that little Fibonacci line there, this may not curve at all. So we'll see how they play this out. But now you know you're using a formula of concept that was used by nuclear physicists to build the Manhattan Project, which was better known as the, what did they name those bombs? They had bomb names for them. Big Boy or something like that? I don't know. They built 2 nuclear weapons, and that was the computer that was doing it for them. The largest hedge fund in the world now is dancing happily. All right, and you can be one too. So, I don't know if I ever really mentioned the 2 stories together, how this concept of mine, using the Fibonacci's going against each other, you know, lagging and increasing. Can we look at Swiss dollar? Yes, let's check that out. It is right. Swiss dollar is having some issues. We were talking about it last week. We were thinking the Swiss dollar pairs trade, which was a flight to safety, we think they've backed off the flight to safety thing. So in other words, fundamentals are driving the Swiss down, I think. And that is that the interest rates are going to rise in the States, and they're probably not going to rise in Switzerland. Or they'll rise mildly compared to what they do in the States. Because we're probably going to go at least to 3% on the 30-year. So that'll take the 10-year, I'm sorry, and drive that up to something like, what will I drive it up to? Probably drive it up to 2.25 or 2.5, something like that, you know. And so I don't think Swiss bonds pay interest at all. They're all minus still. So I think the fundamentals, they're moving away. I think that the dollar was being strong for the last 7-8 months in the against the Swiss. In other words, I'm sorry, weak against the Swiss. So Swiss was being strong for that specific reason. I think that it was reading that factor. It realized that the fundamentals were backing off. You know, I think that's what it really came down to. They realized that, and so you know, money usually knows. You know, money will anticipate, and then afterwards, you know, buy on the rumor, sell on the news. So I think that, you know, last week we were talking about that, how the Swiss has moved and is not a flight to safety anymore, and so. Because now, at least now, Mr. Powell is not calling it transitory anymore, and he's accepting the idea that there is inflation, and he must do something about it. So there you go, right there. You can see it here on our work. Where's it at? Let's put that up there. There we go. And you can see that strength for the last few days. that was that spike last week in the bond. Let's just show you that spike in the bond, which gave the whistle. You know, it went like a dog whistle. Watch out. Fundamentals are starting to work. See that? There, that's the same thing. Same day, same spike. On the same day, same spike. That means the fundamentals are starting to come back into vogue. Isn't that a song by Madonna? In the old days, I would have been able to play the song or sing the song. Now I have to sing it for sure. But in the old days, when we were just Dukascopy and we weren't YouTube, I would be able to play the song a little bit. It was always fun. By law, you can play for 15 seconds. Just playing it for like 6-7 seconds is fun. All right, from there, we go over to, we've done the Euro, we've done the cable, now we've done the Swissy a couple times. We will do the Turkish Lira, see what's going on there. First one we'll take a quick peek at is the dollar Turkish Lira, which is, you know, it's okay, you know, but it's not, it really is not the Euro Turkish Lira. That's the real leader of this. You can see it right there, just holding up very well. It's went into the buy in here. It's trying to make back anything it lost there. You see it never went into a weekly sell at all. We're what, 18 weeks now on this thing? 17 weeks? Yeah, 17 weeks. This is the 18th week. Hey, 47, no problem at all. You know what I saw? What was it? I saw yen. I saw yen take a hit against the dollar, I think, on Friday. We may have to, you know, let's check out, we may have to check out that, what's that yen you like to follow? Is it Swiss yen? Cable yen? I think it's British pound yen, isn't it? So, that's been a really good trending product. Well, you can see there is the euro, right there. The dollar Turkish lira moving up. You see the line has bent over a little bit. Same thing with the weekly. It's trying to, you know, do something. So we'll see how that plays itself out. Now let's take a look at the euro Turkish lira. Right there. Let's get it up on the Chicago Quant. That's a GBP JPY. Exactly. We keep that. We don't lose it. And you can see here, same thing going on. It's trying to roll over a little bit. We're seeing a little weakness in the weekly right there. But, you know, it's had a nice bounce from right there. I guess that's it right there. There's the buy at the 1335. And now we are trading at 1570 basically. That's pretty good, you know. That's a nice little bounce. And, you know, I guess everybody's getting, what do you think, 47? Have you heard about it? Where Turkey's going to give out free puts for people who purchase the Turkish lira. Taking a page from the Federal Reserve. They invented the idea or developed the concept back in late 2018 going into 19. And they decided that was when the Turkish lira was trading at the 6 area. You know, there were 6 euros or 7 euros to the Turkish lira. And, oh, sorry about that. There we go. Oh, there we go. Blew it really up, didn't it? So you can see that there. So we're seeing a little curving down, which makes sense. We should see, you know, some type of, maybe it won't make a new low. If it doesn't make that new low and it starts to turn up again, then it means a lot of people have figured out the put. And because once they figure that put out, I was talking to Giannis about this when it first happened. I said to him, they figure that put out, you know it. They're going to, it'll be trading back up in the 15s before you know it. They'll test the government. So, you know, I mean, that's the nature over there, you know. That is the nature of it all. So, yeah, I'm thinking that if we start to see this thing really start to turn, it means they figured out how to do the put. And I'm talking about the traders. That's what I'm talking about, because that means money will be committed. Right now, they're trying to just kind of go sideways more. You know, the last almost 2 weeks, you know, after the bounce from this action, you know, it jumped up and then it kind of, now it's like literally that's the range right there. So they just need to figure out how the put works. Once they figure that out, oh God, all guns are blazing. you know, full steam ahead, pedal to the metal. I mean, it'll be rock and roll all over again. Because I just don't believe they can sustain it. I think it could slow though. I will admit, it could slow the weakness and slow some of the inflation down. It could. But I don't think it'll be totally successful. I might be wrong. Hey, trust me, I would rather be wrong. I would rather see the Turkish economy stall out where it's at now, build a base, and start to get healthy and see the inflation start to disappear. I would rather see that, because I mean it's one of the only, it's an industrialized nation. There's 35 industrialized nations. I talk about it here. The OEDC, the Organization of Economically Developed Countries, and Turkey is one of them. There's only 35 countries in the world in that club. And you're talking about the United States and Great Britain, and you're talking about Europe, and I don't think China's in it. It may be, but I'm not sure. And I mean, they might be getting close to being in it. If they're not in it, they're probably very close to getting in it. Because I mean, they're like a colony anymore, so you know they're gaining from our values. So they make money because of us, because of the USA. If it wasn't for us, they wouldn't be anywhere. They'd just be stumbling around. All right. So from there, can you imagine the Soviet Union got something like 50% of their GDP by selling to America back in the old days? There'd still be a Soviet Union. They wouldn't have gone bankrupt. But they were real, true competing systems where China likes to hide the fact that they're a competing system. And in many ways, I don't think that they have the governmental structure. I think the Soviets were a better communist structure. And that's saying a lot, because they went bankrupt. So it's not exactly the best one, but when you don't have America feeding you money, I mean, we're plowing in $2.25 trillion a year into them? Half a trillion. We've gotten as high as $500 billion a year where we buy goods from them. That's a lot. And if they didn't have a fixed currency, remember, that's our value. That's not their value. Their economy might be only like a full $1 trillion, right? Because remember, they have a fixed currency. So if the currency was at 21 instead of 7, then their 6% GDP is all of a sudden shrinks dramatically. It's based off of the idea of a 7 on the currency. So imagine if it was a third of what the Russian Federation's currency was. Imagine if it was 2/3 better. Imagine if the Chinese yuan was 2/3 better than the Russian ruble. It would be trading in the 25 area. That'd be almost a 4. So you could divide their GDP and their everything. You could just divide everything by almost 4. That all of a sudden takes that 6% growth thing down to like 1.25. It takes their gross domestic product overall. I could bring it down 4 times the size. So when they say that they're 7 trillion, they could be literally like 1.5 trillion or 1.25 trillion. That's why they won't remove the $1 trillion they have sitting in America in bonds. They're terrified that's probably one of the only things they have left cash-wise. They don't have that, they're really stuck. And this thing with Evergreen is like I hate to beat up on them, when we're talking about this stuff, but Evergreen, they came out with another. They do it. I don't do it. They came out with another announcement today where land prices are not going to get any better for Evergreen because we're not bailing them out. You're talking about $20 million. You're talking about 16 million, not billion, not trillion. You're talking about pennies. How can they not afford to not prop up their own economy? It's because they depend on the Americans to prop their economy up. They don't have the do-re-mi. Yeah, China's CCP seems more like just waiting to rule with an iron fist. That's why they are so scared by Hong Kong's democracy. Yeah, exactly. They make the Soviets look competent. That's the weirdest part of all. They actually make the Soviets of old look more competent Could you imagine if the Soviets had been selling us $100 billion a year back then? They wouldn't have gone bankrupt. If they would have been selling us $50 billion back then of product, they wouldn't have gone bankrupt. I mean, they just went bankrupt because they just didn't have anything. They had no money. So, I mean, look at long-term capital management. That financial disaster that occurred back in the '90s, you know, from the Soviet era situation. You know, Evergreen. Why isn't Evergreen doing the same thing right now? Soviet bonds, you know, Russian bonds went up to, you know, the currency was trading at 4 and 5 ruble to the dollar. All of a sudden, jumped to like 13. Then it, you know, it jumped into the higher teens, and then back and forth 9 and 7, and then back to the low teens, and then higher teens. Before you knew it, it was trading in the 20s and the 30s and so forth, and now it's trading in the 70s. So, you know, if the Chinese were 3 times better than the Soviets, their currency still would be trading at 25 to 28 instead of 7. They don't even have a floating currency. Yeah, that's like the first thing you can give credit to the Soviets. At least they had a floating currency. So I mean, they had a floating currency, so at least countries could buy and sell it on an open market. You can't even buy the Chinese yuan, which is why you can't get, you know, Evergreen won't get any money. Evergrande Real Estate, which is their largest real estate company in China, is not being propped up by the Chinese, and they're basically bankrupt. So it's just a matter of time before this whole stuff falls apart. It's kind of crazy. It's right in front of our faces. You know, one day it's going to be like, you know, however, when someone says there's a day of reckoning, what's going to happen? Sooner or later, all the truth is going to come out. People are going to go, wow, Bloomberg never said that, or oh, CNBC never said that, or oh, MSNBC or CNN or CBS or ABC or CBS, ABC, and NBC didn't say that, or Reuters or New York Times didn't write that, or New York or the Washington Post never wrote that. All this stuff that I'm saying, one day it'll have to come out into those arenas, and people will be like, oh, how come for all those decades they didn't talk about it? Yeah, it was right in their faces. Amazing, huh? Let's see, was it? Oh, well, this here, let's see what 47 says. It says, China's CCP basically wants to pressure the world back to their old tributary system like in the 16th century. Yeah, that's not going to happen. Look, you know, and the end result is that the socialists in America love China because they, you know, they're into that. That's what they are. And they're going to get thrown out of power. I heard this morning people are starting to talk about it. If the Republicans pick up 35 seats, it'll be more power than they've had in 100 years. All that is right now they're down by 5 seats or 6 seats. I think they're down by 6 seats. 6 or 7 seats, right? If they pick up 35 seats in this next election this year, they will have more power than they have had in 100 years. All this fantasy by the media trying to tell you how the Republicans are running things here, when all we've been able to do is play on the edges. It's going to come to reality. You're going to see a super healthy America like under Trump. Trump showed us what it looks like, and that's what's going to happen. And the media won't be able to hide it anymore because we've just seen Mr. Biden and all these socialists turn the world upside down. But yeah, I find it all fascinating when we look at the Turkish Lira here. They're taking the same path as the U.S. Federal Reserve took. They're going to give a free put to protect people who buy Turkish Lira. You know, I mean, they got to slow this stuff down. They got to do something. And if they, I don't think they raised rates though. That's the problem. I think they keep the rates flat. That's what they're doing. So that will drive the hedge funds and everybody else to try to figure out how the put works. And once they've got that put functioning, they'll get in there swinging away again. Now, I don't know if we're going to see, you know, 21 again in a while, or, you know, if it just kind of, you know, if, you know, they used to say, there's 2 sayings that floats through my brain when I say all this stuff out loud to all of you. And that is, one saying is, When America sneezes, the world catches a cold. That's one. Okay? And so, if America really gets super healthy again under Trump, you're going to see the world economies really start to turn up really nice. Okay? Then the second one is that America is the engine of innovation and economics on the world. And so it's the engine to the train that pulls the world. So that I think of those, and I think that we're going to see a lot healthier politics. We're going to see a lot healthier economics. We're going to see a lot of healthier things. So the inflation probably won't be like the 1970s and how Mr. Reagan had to end it in the 80s. How he had to beat it up. So I think that's going to be the positives out of it all. That's how I see it. And then the CCP and so forth. Who knows? Maybe they'll grow up finally. Make them realize that being a semi-independent colony of the United States is not going to last forever. Maybe other countries in the world. The financial system is totally broken. I agree, Hans. Totally broken. That you couldn't say it better. No PhD could say it better. That is the sole truth of it all. Thank you for saying that. And so we'll see how this all starts to roll along. There's a engineer scientist that I talked to in Italy, an older gentleman than myself, and he keeps on trying to blame capitalism at times. I keep on telling him there is no capitalism outside the United States. How can you blame it? As a scientist, I said, look at the math. I said the United States is really the only capitalist society out there. Israel to some extent, but I mean overall. And then you have Europe and so forth has flavors of it, but they're not capitalist societies. They're socialist societies. So how does 350 million human beings in the United States lead the world around constantly for the last couple hundred years? Is because of just pure capitalism, solid capitalism. We're able to cut emissions and all the pollution things more than anybody else. Our waters are cleaner, our environmentals are more cleaner, so forth and so on. Less poverty, more millionaires, the whole bit. So obviously, just because you hear a country is fascist, that is not capitalism. That is extreme right side of the communist system. That's all that is. And you're saying, what about fascism? Fascism is communism. You're talking about Tito and Hitler. These guys, capitalists don't call themselves National Socialists. They don't name themselves that. They don't. Trust me. That's not part of the program. It's when you're a capitalist, you're a capitalist. You're not a National Socialist. So it's funny. We're going to see more capitalism on a good way with safety nets, benevolence. Not trying to steal property through taxation on everybody. More people will be eating. Under Trump, there was less poverty. People were getting paid better. It's just like we'd seen numbers that we've never seen in America's lifetime of unemployment numbers. For minorities, everything was fantastic. And that's because it's clean, safe capitalism, functioning right every day. And what's Mr. Biden do? He gets in there and he just rips it all apart and tries to throw it away. So Hans, you're right. Financial system across the planet is broken. This quantitative easing era is coming towards an end, it looks like to me. Mr. Bernanke's graduate thesis, that's exactly what it was, honestly. He honestly got a thesis on what could have been done in the Great Depression, and it was the quantitative easing. And here you are, 50 years later, 60 years later from the Great Depression of 1930. So in 2008, was that 78 years later, he pulls out his graduate thesis and enacts it. And it was okay if it just stayed for the same length of time that his graduate degree is in. In other words, what he wrote his paper on, it would have been wonderful. But no, they have to run it, Obama gets in at the same time. The world economy falls into a hole, and Mr. Obama at the same time becomes president. Doesn't that tell you something? And then, another young communist. and then what you get is instead of letting it go, they abuse it. I mean, the quantitative easing should have ended somewhere around the third year, I think, in his thesis. You know, the first 3 years would have solidified everything, and then you slowly back it out. You know, stock markets start to gyrate up and down, and then what happens is that you start to raise in interest rates. Europe right now would not have 15 trillion, not billion or million, but 15 trillion in minus investments. What do you think of that one, Hans? Is that crazy or what? The zero and minus interest rate to government bonds? Is that the most insane thing you've ever seen or what? All right. So where do we go? Okay, so we're looking at Turkish Lira. We can move from there to the Canadian. We've had some interesting topics here today. Let's go to the Canadian. See what's going on there. Oh, did we? Let's just see this again. There it is. Yeah, and that's the J4X, and that's that right there. You see that? You know, we should give that a name. We should give it like the Stony Brook name or something like that. Never thought about that. We should tell Dukascopy they should build this indicator as call it not the dock indicator, call it the Stony Brook indicator, you know, or the Manhattan indicator, you know, from the Manhattan Project, because that's where that came from there. The moving of stochastics. Matter of fact, maybe I shouldn't. I won't say the name of the scientist who told me, because his son is a big computer scientist who did some miraculous work, and I don't know if he wants to have that, you know, people know that his dad was on the Manhattan Project. You don't know. Some leftists would probably be nervous about the idea. You know, he's probably like with Greenpeace or something. Anyway, all right, we'll just keep on rolling along here. So let's go take a look at the Canadian. There's the Canadian. You see that it's trying to roll over, which that's usually a little of the signal. We were thinking this looks like a head and shoulders here, this action here. So maybe this is a top, and we're going to start to see a more valuable Canadian against the dollar. Let's see what it looks like on J4X. Right there. There we go. You see that 126? There's pressure there. You can see that the last couple of weeks, and it stopped, and now it's come back again. And in some ways, it does look like the head and shoulders there too. You know, like what we're seeing here. See that head and shoulders thing going back to the end of December, and the shoulders were the middle of, I'm sorry, November, end of November. First shoulder was the first week of one, and the last week of the other. Then the middle of the month in December was the head, and it looks like it failed a little bit right there. We go to J4X and look at the Manhattan indicator right there, and we'll have to look it up to see if there's a Manhattan indicator. Anybody want to do that? Go for it. Google it. See if there's a Manhattan indicator or a Stony Brook indicator. If there is not, then we will label it that, and I will talk to Giannis, and maybe they'll put their computer guys together, and then you'll be able to click on it, and this whole thing will jump up as the Manhattan indicators. Because Doc doesn't need reputation. I don't care. I don't care. It's quite all right with me. I got my Chicago quant. That's plenty of tool. We'll give Dukascopy some good tool that we've developed, or reconfirmed how well it works compared to what the Market Technicians Association. This indicator will be like the leading indicator compared to all the other indicators that they call leading indicators. That'll be fun. All right, and then, oh yes, we're looking at that head and shoulders. There it is. So it looks like it's trying to do the same thing. So that would be nice to see it. You can see that this side shoulder spiked up there. You can see the little teeny spike right there, and it choked. So this could be moving down into this area here. Maybe even go challenge the lows. Maybe there's good action coming for that currency, which could indicate more rising oil in price. I know it's going to be tough, and maybe metals complex starting to move again on the upside. We'll see. I've become convinced over the last couple trading days that we're never. Here's something, Hans, if you want to think about this. I wonder if we've seen the end of silver and gold being a tool any more important than any other tool in the inflation fight. In other words, it's just another tool now. has nothing to do with inflation, obviously, because you can see it's trading. What is it now? It's trading at, where's gold at? Let's see what gold is at. Gold is trading at, I think it's at 1800, right? Right there. That's crude. Crude's off a little bit too. There's gold. Gold is trying to perk up today. You can see that. But where is it at? It's not even at 1800. And the all-time high is like almost 2200. So here we have, what is it, 15-year inflation, 20-year inflation, 30-year inflation, something. I think it's like 30-year inflation. In other words, we've not seen inflation this high in 30 some odd years. So gold missed it big time. And it seems like the cryptos picked up on it, and then the profit takers came in and got out. I'll show you that too. Right there. You can see the same thing. Let's go over to here where the head and shoulders started. Let's move that over. Where's that mouse at? There. So in this case here, the high was in the middle of November. And they took their profits and they've been selling it down ever since. We went to a weekly sell about a week and a half later. And we've been in a weekly sell now for what, 2, 4, 6, 8. This is the 9th week now in a weekly sell. 9th week? Wow, let's do that again. 2, 4, 6, 8. Yeah, 8 full weeks in a weekly sell, going on a 9th. So, you know, we assumed that the cryptos would go up during inflation because, you know, inflation is kind of like a failure to a certain extent of the central banks and, you know, the Federal Reserve overall. So if it's a failure, then that's what we always assumed the cryptos would do, is the cryptos would be the, you know, kind of like an alternative. And, you know, we started thinking, well, you can't take delivery. At one point, we couldn't take delivery for, I don't know, 6 years or 8 years with the gold. So it was becoming incredibly hard to take delivery. And so it was all paper gold. So they generated a lot more gold than is outstanding that can be exercised. So when you look at, you know, there used to be a statistic that everybody paid attention to. And that was how much gold is in the vaults at the exchanges, and then how much open interest is there in the trading every day. And so they were almost 1-to-1. They would be like, you know, 1.2, and they'd be like 1.3, and they'd be out of whack, and then they'd come back down to about 1.1 or 1.4, back to 1.1. Now, I know this is a little confusing. I'm going to say that one more time. So back in the old days, it used to be like 1.1 or 1.2 or 1.3 ratio between open interest of the futures contracts versus what physical gold was at the exchange. Well, the last time we looked at stats like that, the number is something like, I don't know, like 58 or something like that. So yeah, it's gone from 1 to 58. 58 times higher, greater. So in other words, for every ounce traded, or every 1,000 ounces are traded at the exchange, let's put it this way, for every 58,000 ounces of gold traded at the exchange, there's only 1,000 ounces sitting in the vault now. Whereas in the old days, before all this quantitative easing, if there was 58,000 ounces of gold traded, there was a good chance that there were like 57,000 plus ounces sitting in the vault. It was almost 1-to-1. And so that's another, what Hans is talking about, is the financial system is broken. It's just another example of that disconnect, you know, from reality. So, all right, from there, we slide over to, let's take a look at this on J4X too. Let's take a look at the Bitcoin. We'll go back to the other currencies. We look at the South African Rand, and so, oh, I know, we look at gold and we look at oil. So let's take a look at those too. So let's put, there's the oil. And let's put it over here. You see it's trying to roll over. Friday went into a daily sell. Right there, you can see that. We're still in a weekly buy, so nothing really too scary there. Even the back month is starting to reflect a little weakness. It also went into the sell on Friday. So, what else can we say about that? I guess that's about it. So, and then we looked at the gold. Gold is trying to lift up today, so Canadian is heading down, and we'll see if that keeps the process going. And we've shown you what the Bitcoin looks like. We're disappointed that it is not a leading indicator when it comes to inflation, and that's what we were really hoping for. We were really hoping for all those cryptos to be adverse to the central banks. Remember all the crying and screaming of, we're going to replace the dollar. Well, you're not replacing anything, obviously. You can't even move away from the inflation. This thing should be, if it was at 70 in November, then it should probably be at like 90 or 100,000 now, not at 40,000. So in the selling that went on, obviously the longs have taken their profits and they're going to sit out a little while. And you don't even know that's the problem too, is with the quantitative easing, you don't even know if like the central banks are just abusing it anyway. In other words, they're going into the futures markets and they're going into the ETF markets and they're selling it. That would not surprise me whatsoever. None. Bupkis. Zero. Alright, from there we'll slide over to the South African Rand. See what's going on there. We would assume that has been going down. So that we're assuming that maybe it's still on that course, and that's why we're seeing some strength in the metals complex. And it's popped up a little bit today, but overall it's still down the last couple days since the interest rate shift right there. That's where it was. The interest rate shifted last week. Is it there? Yeah, it's right there. So let's take a look at it on the J4X. Dollar ZAR. Right there. And that's the South African Rand. It's moving down, which is a bullish thing there. You can see that on the daily, just like we're doing right here. As you can see, and it's doing it right. Is that nonsense? So you can see it right there. We're doing it all in here, same way. Matter of fact, it's been in a minus. Oh, that's Bitcoin. Sorry about that. Let's go up here and do it. Let's change that. There. There we go. So you can see it's doing the same thing, moving down, just like this is moving down. So they're both moving down. See? Moving down. Moving down. Moving down. Moving down. It's in that weekly cell. Let's see where it is on the weekly on this. And we'll see how it pops out here. Let's take a sip of my tea. It's been a fun day today. I love talking about reality. Oh, I love reality. Reality makes me excited. Being able to peek behind the curtain of physical reality. And the weekly doing the same thing. It's a week like that. Like it is right there. So you see here, all that weakness there, for 3 full weeks going on a 4th week, right there. And the same thing, you got 3 hinkies and a unched in the middle of it. But you got basically 4 hinkies overall trending that way. Indeed, indeed. All right, now from there we'll go over to the ruble, a real currency. It floats. You can trade it every day. Not a fantasy. That's the other problem. That's why they won't move the $1 trillion from the United States also. And that is because they don't know what day they wake up and find out that all of a sudden the Chinese yuan goes the way of the old ruble. With the Soviets running it. And one day it's 4, then the next thing you know it's 9, then it's 13. It starts to make the Turkish Lira look like nothing. It'll take definitely the pain away from the Turkish Lira, that's for sure. And that's exactly what we have to be concerned about. And that's what they are terrified of. And obviously, since they couldn't even save Evergrande, it tells you how weak they are. No, you're not going to hear that in most places. They're just going to say, oh yeah, the #1 real estate company in China went bankrupt for a mere $36 million, and the government couldn't help it. Well, since we helped Bear Stearns and Merrill Lynch and Citibank and Santander and Deutsche Bank and Bank of Scotland and Lloyd's of London, they couldn't find pennies to fix it. China, they can't find pennies to fix it. It tells you that the decision makers there are very, very incompetent. It means that you've got to be very careful, because one day that currency is going to leap in an outside market to 25, and they're going to be they're not going to know what to do. They're going to be like deer in a headlight. And American investors or foreign investors that are invested there they're going to lose 75% of the value of their assets. Like that. 75% of their assets are going to go like smoke in the wind. It'll be like one moment they have $10 billion, and the next thing you know, they'll have like $2 billion. It'll be like they've lost $8 billion out of nowhere. I'll be like, wait a minute, I don't understand it. Yeah, you can, look at the Japanese. Here's a perfect example: is the Japanese market, right? Japanese went nuts back in the 70s and the 80s, started rocketing with their successes industrially, and they spent money like there was no tomorrow, and they bought properties around the world like the way the Chinese are doing today, and now those properties at one point had fallen 80%. The Nikkei had gone from 39,000 down to something like 11,000 or 12, right? And it sat there for decades, not weeks, months, or years, decades. And now I think the thing is trading in, where's that? Let's put it up on J4X. I think the Nikkei now is trading at, let's see, let's see, where are you, Nikkei? That's it right there, I guess. So now it's trading at 28,000. It's still 11,000 points off of its all-time high. 11,000 points. At 28,000, it's still 11,000 points off. I mean, this is a weekly chart, and you can see there, going all the way back to, there's like 2012, where the product was trading at the 8,000 point. Well, I'll tell you, if you're an investor in a country like China, that has to sit in the back of your head every night when you go to sleep. That one day that all your assets could be literally down 75% out of nowhere. In this case here, it went from 39,000 down to something like 8,000. Ow. And it stayed like that for decades. This year, I think, let's see if we can get a monthly up there. But I believe that we're seeing, we're still at, something like, you can see here, going back to 2011, we've made new highs, but this thing is 11,000 points off of its all-time high. That's still, at a 28,000 index, and 11,000 points is basically a 33, right? So it's still 33% off of its all-time high, even with a fantastic run from 8,000 to 28,000. It's still off 33% at this moment. Sure does make it tough to, want to invest in a country like China when they don't even have a floating currency. At least Japan and Russia, the Soviets, had floating currency, so you could see the reality. And so the numbers would make some sense, even if there were bad numbers. Anyhow, we're past our point of no return. We are at 8:31 Eastern Standard, and we started at 7:30 Eastern Standard, so we've over an hour here. So we're going to jump off. We'll put a label on this, something like, we'll have to come up with something fun. All right, maybe what Hans was saying, financial system is broken. Maybe something like that. All right, this is Doc from North America. Happy trails to you. Until we meet again, that'll be tomorrow. Happy trails to you, to all our trading friends. All right, traders, arrivederci.